Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Hope everyone had a great weekend. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We've got a lot to get through. Of course, we'll talk about Warren Buffett's annual letter. Between that and the vaccine and the stimulus getting to the House, we are up pretty much across the board this morning. So we'll talk about that and how that sets us up for the rest of the week here. Got a couple earnings on our radar as well. Our guest is Tim Quast. He is the founder of Market Structure Edge. Today's show is also sponsored by Market Structure Edge. It is the first decision support platform for traders built on market structure. Try the new way to trade for free at marketstructureedge.com. Where's the link in the chat? There's a link on the bottom of the screen there. Let's throw it to Joel now. Joel, we'll bring your charts up on the screen. How are we doing in the overnight trading session?
All right, we're doing well, Spencer. Week close on Friday. Boom, back up 40 handles, 49 and a quarter. Friday's high, 57.75. Got to 57 even. There's your bogey on the upside. Crude a little weak on Friday. That's up 79 cents at 62.29. Gold trying to get away from 1,700. Big breakdown on Friday, up $7 at 17 to 35.80. Silver going the same way, but a little bit more, 1.4%. That's up 37 cents at 26.81. Wild weekend for Bitcoin. I saw it trading in the 43,000 handle. Now up $2,350 at 48,680. You tell me if 45,000 is important support. Just bases the futures here in Bitcoin. We're now bumping into the 3850 handle. Triple D, we were chatting Saturday morning for the pop here, and here we are right back at Friday's high. Will the rally continue?
To be determined. I'd say we're in the middle of nowhere here. I'm kind of in the camp of it depends on your positioning. I mean, if you're too heavy, you use the rallies to lighten up here. I'm going to say it again. You're on margin here, like, oh, stocks are always going to come back. I want to be, 2 times margin or whatever your brokerage house allows. I think you're way too heavy for this market. I think there's a lot of risk in here right now. So could it continue down? Well, we were talking about this last week. It might just bounce back. But, I try to assess risk. And when we had that first washout last week, that's when we had the bounce after that, the immediate bounce a few hours later. I use that to lighten up some of the risk. So long-term stuff, I'm sitting with a little bit of cash right now. I'm not all in. Short-term trading, play the chop, buy the dip, sell the rip. That's what Mitch says. That's what I say. It's what it continues to work. Friday close. Whatever. There was a rebalance. There was apparently a rebalance.
Sloppy.
Not even sloppy. It was just straight down. I mean, they hammered stocks. So, prop trader, I'm always trading everything. I do a gap sheet at the close. What's that mean? I sent a whole bunch of orders, LOCs, to buy on the close if stocks are willing to gap down. I usually get, I'll send, I honestly, I think I sent over 100 stocks usually. I usually get maybe one, maybe two, and on the end of the month.
Why,
I always
though,
send them at the end of the month.
Dennis, discuss why. I mean, you want something that's out there.
Yeah,
right?
like I'll throw a gap sheet down. Usually I run it about 0.5% down. So some gaps down 0.5% on the close. I'm talking the majors. I'm not talking some small cap
Give me an example.
I'm talking your big stocks like Apple, Microsoft, like your mega caps. So I usually run at 0.5%. I ran it wide because it was looking sloppy and we were in a more volatile environment. I think I ran at 0.75%. Normally, on those gap sheets, like I said, I might get one stock, I might get two. I think I filled in 30 positions, 30 stocks on the close. Boom, 4 o'clock. You own 30 stocks. Bang. It's like, oh, they gapped this sucker down. So anyway, still working out of some of those here this morning. But I mean, anybody got filled in those gap close, you're still holding them to today. It's a windfall. I was, and I hedged out. a lot of the risk, and because I'm not going to take all that long risk into
No,
the
no way.
weekend. I'm not suicidal here, so I hedged out majority of it off with SPY and Qs. But man, I tell you, if you weren't hedging, you just decide, oh, I'm just going to buy that close. You got a lot of gifts. Look at Apple in the last 5 minutes. Look what it did in the last 5 minutes. From 125 to 121, last 5 minutes, straight down. Hammered them on the imbalances. Yes, it was a little rebalance. That's probably the reasoning behind it. But you can just keep going through. Bring up any stock in the S&P. It pretty much looks the same. There was just a ton. I can just go through even some of the ones that I got here too. But like Microsoft ran down significantly on the close, 235 to 232 in the last 2 minutes. These are big moves, and obviously SPY. We know we lost 40 handles in the last 7 minutes. So, there is opportunities here. And when you see moves like this, typically textbook is to provide liquidity into that because usually there's a bounce back. We got the bounce back here over the weekend. Stimulus helped it. So, where do we go from here is the next question. And I'm going to say nobody knows. Again, nobody knows anything. We're kind of in the middle of nowhere. Does this rally fade? Well, it was the sell-off that was overdone. It was for order flow inefficiencies there with the rebalance at the close. So we dropped 40 handles on nothing. So we're getting the 40 handles back. So we're basically back to where we were at 3:50.
Scratch. Yep.
At 3:50 p.m., 10 minutes before the close on Friday. So you look and you analyze the technicals, and on some stocks you still look okay. On other stocks you look completely broken. So it's stock to stocks. It's dependent here to a certain extent, but normally you see rotation. Normally you see, okay, well, this is up and this is down. Today is one of those days where they are just buying absolutely everything. I've got a list of 200 stocks, major S&P components I keep on my screen all the time. Every single one of them is green. Haven't seen a day like that in a while. Every single one of them is green. General Dynamics just ticked red, but I think that was just off exchange print. If you're looking at the filters, I run a filter with 2,000 stocks in it. I got 8 stocks that are down. Most of them European. RACE is trading down. FTI is down. 8 out of 2,000. So that's how telling you how broad-based this rally is this morning. So they're just coming in, they're buying every single stock. There's going to be some separation, though. So you got to look and you say, okay, well, this is, warranted, this is not. Are we, rallying on stimulus? So is this a reopening trade? And does some of the stay-at-home tech like Peloton start to roll over here? It's a possibility, but they've been weak here as of late, and there's buy the dippers everywhere and stuff. So, again, this is a tricky market here this morning because I'm not seeing any real pattern stand out. It's a buy everything rally.
And you have an interesting week. I mean, you have jobless claims on Thursday, retail earnings start in earnest tomorrow, jobs number on Friday, which we really haven't been moving off that much. So I don't know. I think if you get that dip again off this open, I think you're going to find buyers. And I think if you get a real solid rip, a continuation move, you're going to find sellers and just kind of grind into that Friday number. But I was looking at I was like, okay, this is a good rally. This is 345. Apple's up. Microsoft is up. Amazon, Google, Facebook, they're all up. And then I'm like, oh, man. And then on the close, they just read, I think that the imbalances, I still don't understand why these guys, I know they need the closing print, Dennis, but gosh, isn't there a more efficient way to get out of these large positions than putting those kind of stupid orders out on the close? But they need that closing print, right?
Yeah, if you're rebalancing, they're going to need the close. So that's, the same reason why Tesla gapped up, from 670 to 695 when it was getting added in the S&P. You get these, rebalances that have to happen. And, that's a smaller one there on the Friday, but so it's not like a major S&P rebalance. It was one that I'd even forgotten about. I knew it was there, but I forgot about it. But I run the gaps all the time anyways, end of the month. I run the gap sheet every day. But when I usually get stocks is usually third Friday, end of the month, end of the quarter, and on any special rebalance day. That's usually when you're getting stuff. And usually this stuff works out. I mean, I'm not telling everybody to go around. You have to. The one thing advantage of prop firm, right? You can send more orders because you're sitting with a retail account, and you send 10 stocks, and you're like, I'm merging out. So, I mean, it's tougher if you're not prop to participate in some of this stuff. But again, if you're just cherry picking some of these imbalances, you can. You get the imbalances there. It's all posted. It's public information. You can look, and they're like, everything's massive to sell here. So there's going to be some stocks moving on this. So 350, all the traders that get the imbalance feed look, and they're like, whoa, this is going to be ugly if these are real. And they were, and that's why we kept dropping. So they're anticipating it. The anticipatory traders that read the 350 imbalances start selling stocks, start selling the futures, just start hammering them because it looks like there's going to be a lot of selling on the closing print. And that's exactly what it is. So sometimes you get the gap down, sometimes you get the rundown. A lot of times in this market environment with HFT, it's a rundown where they're hammering bids all the way down, and then at the closing print, it kind of just settles out to where it is, that they've kind of figured it out. But there was still some gap downs on the close too. So
and they flip too. Also you got.
Oh yeah, you can't just take it and say, oh, I'm going to sure all these stocks are going to go down. You don't know for sure. I don't usually play it that way. I usually just play it if they're going to run down. We're going to lose 50 handles in the last 5 minutes. I'll be a buyer because that feels overdone. And if it's off, of rebalance here, it's overdone. And you know what? A lot of those stocks bounce back after hours, and I was able to flip out of them. Like Disney, I think I had Disney that was really got. I don't know. Yeah, Disney got hit a little bit.
There's some people joining late here. I think they slept in a little bit, and they just want you to just real quick run the gap sheet meme. Just real quickly.
I'm running,
once again.
Yeah, so multiple ways, and I've got different algorithms too, but I've just got a basic Excel VBA spreadsheet. And it's grabbing, it's linked into my account. It's grabbing the prices where it's, the current price. It's grabbing that. And then it's going to send the orders based on where the closing price is. So if you want to get it towards the close, you send it like 10 seconds before the close. It depends how quick your algo can go too, right? If you send 100 stocks, we can instantaneously send them all, great. But you send that, 0.5%, 10 seconds before the close, and if stock gap's down more than 0.5% on the close, you're probably going to get filled long. Again, I'm sending them LOC. You can send them limit, but then you get picked off is the problem. Like people that don't have access to LOC orders, you just send normal limit orders, and we're getting really market structure-y here. And it's going to be above maybe a lot of our listeners, but there is some pretty seasoned traders out there. So I'm kind of talking to you guys right now. I mean, these are inefficiencies that I try to. This is an edge. I mean, you had Bob Bright on just talking, on Friday, because Joel did a 3:30 show there, and he had Bob Bright talking. I mean, Bob's talking about the edge. This is an edge. I mean, a stock gapping down 0.5% because of a rebalance is an edge. It's a tradable edge, and the edge is that I'm going to provide liquidity into that. I'm going to buy into that closing print because I think it'll snap back. A lot of times they do. And the market was so heavy, a lot of stocks didn't snap back. Now over the weekend they did, but you get luck from the stimulus stuff. So, the whole goal of that is to try to, saying it's gapping down 0.5%. Well, I think it's going to snap back maybe half of that, maybe pick up of 0.25%. So it all depends on,
And you can send that within the last 30 seconds or last 10 seconds, Dennis?
Yeah, IB has it too. At IB, I can send with 2 seconds to go. I can send a sheet. You got to be careful. You got to make sure when you're using algorithmic trading, you can't make mistakes. There's no like, there's no. You send 100 orders in a second. If you put your parameters out to lunch, you could really get screwed. So I'm not advocating that any non-seasoned traders be using algorithmic trading. It's suicide. You've got to really be seasoned to do some of those algorithmic strategies. I've run algorithmic trading strategies for 20 years. So I'm comfortable with my programs. I've got my own proprietary programs that I've had created. I have other ones. Like I said, Interactive Brokers has some good ones too, and I've used theirs as well. But yeah, you can send them all. There's lots out there. You can send them with two. Some of these guys really sophisticated and send them with us like a second to go. Boom. But if you send it LOC, you're only going after the closing print. Limit on close. That means you get fill in the closing print or it cancels. You send them limit, you send them early, you could get picked off on a rundown. So these are different, strategies that are maybe getting ahead of everyone. But we're just trying to give you a different eye of, they're trying to open up a different world to some of our listeners out there, that this is what's really happening. These are the strategies that are happening behind the scenes by the professional traders. It's what your high frequency traders, they're running this kind of stuff too. Maybe a little bit of different spin on it. I put my own little spin on it too. But for the most part, just trying to take advantage of a pricing inefficiency at the close. Gapping down, running down, 4 points on Apple in the last 10 minutes is an inefficiency that I would try to take advantage of.
All right, climbing into the 50 handle here. I'm 42 3/4 handle, 38.52. Spencer, do you want to cover some earnings? Really not much. I
I'm
saw
gonna let you talk for a
Stratasys. Is that
second.
out yet?
What's
Or
up on
Workhorse?
ExxonMobil?
What's up on
Just
ExxonMobil?
ripped higher.
Just
Is
now?
oil taken here? Oil
It's
taken?
up 63 cents. Let's take a look
Yeah.
at it.
Let's take a look at ExxonMobil here. Something's going on there. Let's take a look.
Just ripped higher.
Let's take a
Check.
look.
They're adding a few people to their board.
Did they just come out with a press release? It's on CNBC right now.
Yeah. Looking.
Yeah, they're talking about it on CNBC right now.
No, looks like it's a CNBC report. Adding Jeff Ubin and Mike Angelakis to their board. Okay.
Pair of highs, nothing here to look at, folks, until we got a big level. Two highs, 57 even, 57 1/4. Stopped at 57. Might even be some stock in the book at 57 now.
Okay, let you guys run with it for a minute.
That was interesting. Yeah, there's no PR,
Adding
but
No,
people
it's
to
just
the
because it's
board.
talking CNBC
Yeah.
too.
yeah, it's got the breaking news banner and everything. All right. We got some breaking news here, I guess.
Always.
Oh no. No, my soundboard's not plugged in. Damn. Okay.
All right, go.
I'll have to get that fixed. Sorry. Okay. Let's go back to the rest of the agenda. So that was a good lesson. We'll get to more of that conversation with Tim Quast when he's on at 8:35. Let's talk Johnson & Johnson here. Okay. The news was out over the weekend. Single dose vaccine gets the emergency use authorization from the FDA. This was out, I believe, on Saturday morning. I think it was out. So it's been a couple days now. Same story as the prior vaccines. The shipment's going to be the rollout will be a little bit slow, but they expect to get it to get more as we go on here. J&J is up this morning, or at least it was last I checked. No, it's not. I stand corrected. It is now. Whoa! Look at that J&J pre-market chart.
Boy, Dennis, were you up at 4 a.m. on this?
Joel, this is you right now. I gotta go. I'll be back in a couple minutes.
Okay, all right. He's got a lot here. 165. We talk about this, overreaction with the 4 a.m. opening.
Holy cow!
I mean, come on, 165. So it's up 279 now. So it was up $5-6. I mean, isn't this kind of like old news? Weren't we talking about this last week?
Yeah.
Wow. I don't know what to say. I mean, there was no exact daily high at 165, 165.96. But even if you're not reacting, let's say you didn't sell immediately on that 4 a.m. pop. I mean, if you waited to like 4:15, 4:30, 5 o'clock, even up to the 6 o'clock hour. I mean, when news comes out like that, this the big overshoot. And now, I mean, it's still up 279, but we're within the range already from Friday. So holy mackerel. Let's just use 162.41. I mean, that's $1.20 away, and then 163.70. So besides, you have to throw out the pre-market action here and just look at your levels from Friday. 277. I mean, well, this did have a big range on Friday. I don't know if it's going to go that far back and go red on the session because we had such a big sell-off. It was down 5 points on Friday, and now 4 points on Friday, and now getting it back. So Friday's close 158.46. I'm keeping an eye on the high from yesterday, 162.41. They're only going to ship 4 million doses, so I don't even know how much this adds to the bottom line either. It's more just kind of a feel-good thing, but that's what you got there. Johnson & Johnson still up 270, which looks great, 161.16. That's the good news. The bad news is earlier it hit 165.
I bet you Dennis is getting down and dirty in the banks right now. Go look at like JP Morgan, right?
Well, it sounds like he had some oil positions on there, the way he reacted to the ExxonMobil. What's moving with the banks? Or
they're just, I mean, they're off with everything else. There's no news. I mean, I guess we're taking a breather from bonds controlling the entire market here this week, like they did last week.
Let's see what the bond market's doing. It's having a halfway decent day. But I mean, look at the move that it's had. Holy macro! I guess not. Pre-market trade. No, bonds are getting killed. That's right. I'm looking 143.12. Back at the low from Friday in the TLT. So the rate battle continues. Boom. That's it. Your TLT is getting whacked, and your bank stocks are going up. Let's take a look at JP Morgan.
I think that's your leader here this morning, yeah.
Not a lot of pre-action, just already trading above Friday's high. Let's see. All-time closing high in this one. That's the level I'll give you for JP Morgan. Let's see. Well, all-time high was made on Thursday, 154.90, 151.18. So, wow. Bit up big from the close. That probably got hammered on the selling balances too. 150, 140. So you haven't hit Friday's high yet. Friday's high is 150.87. Take a look at that. Wow, big ranges in this stock. Well, now it's 150. So I guess a 4-point range is not as bad, but still under Friday's high at 150.87. Let's take a look at Bank of America. That's getting a pop too. That's a very big move for Bank America. This is at Friday's high, folks. Keep an eye on 35.60. No, you haven't even got the Friday's high yet. 36.04. The recent high in that one was a buck higher at 37.03. 38.604. That's what I'm looking at in JP Morgan. S&P's back under 38.50 there. But not seeing ExxonMobil news really can't move the banks, but we'll see what's going on with them.
I don't know if you have anything new to say about Workhorse. They're supposed to have earnings this morning. I don't see it out yet, but they, of course, had the news, the two headlines last week. The headline from Wednesday or from Tuesday that they were not getting the contract from the USPS, and the headline from Thursday that the Congress is going to fight that decision. So don't know what's going on there, but they're supposed to report earnings for whatever earnings are worth to a growth company like this. They're supposed to report earnings today.
I mean, it obviously got oversold on that decline. What was that on Tuesday? Little bit of a technical bounce, but I mean, I don't know how, what the politics, let's say you are buying this, you got to look at that low that you had on Tuesday as a potential exit point. You also it did come into monthly support here, but what's the catalyst going to be? Right? I mean, if it's, let's say Congress doesn't, I don't know what Congress is trying to do to get them to reverse the decision. But they went with a U.S. company, a well-established U.S. company, as opposed to, a new company in Workhorse. So I don't argue with the decision. Congress can, but I don't know what the chances of that being reversing. And I don't know what other catalysts you have out there to get this stock back over $20.
Let's talk Berkshire Hathaway. We haven't talked about that yet. Put a 1 in chat if you read Buffett's annual letter over the weekend. I did. I love reading it every year. It's one of my favorite things to read. I would recommend every new trader, mostly not so much traders, mostly new investors, read Buffett's annual letter, because it's hard to read it and not come away feeling really good about buy and hold and about America and about investing in American businesses, because gosh, that guy just has whether it's him or whoever writes his letters, I don't know if it's him or it's someone else at this point, but they do a great job. They're really easy to read. And they just make you feel so good. Like, I feel so good about the future after I read one of his letters, and I feel really good about buying, hold, and investing, because he makes it seem so easy. And I know it's not that easy, but he just makes it seem like it's easy. Anyway, Berkshire Hathaway had earnings over the weekend. I mean, talked a lot about buybacks, talked a lot about buying back more Class A shares. That's why Class A shares are so expensive. And Apple's buyback, how that's helped Berkshire. But let's just pull up the chart. The earnings were good. I mean, what do you expect?
They had earnings along with the annual letter. Not doing it.
Yeah. So all right. Look, operating profit declined year over year. That's to be expected. Down 5.48 billion in the third quarter versus 8.07 billion a year ago. Again, to be expected there. They did buy back 9.3 billion shares worth of stock in their third quarter, so our fourth quarter. And yeah.
It's getting a pop here. I just would keep an eye. We're over Friday's high here. This is a tough one. 250.56. I don't think it. After being up 5 3/4 handles, that's the only number you have there. It's 250.56, and you came down very hard off that. You had a 10-point break. You're trading in 246.25. I would be a little bit nervous, not nervous, but if this broke 245, you may see your close at 43.69 and 42.93. So just quickly, anyone that got caught up in this little 2-day sell-off, you're right back in the middle. On earnings, let's see what kind of volume is trading. This probably doesn't trade a lot of volume. No, 26,000 shares. So I'd be a little bit careful. Be more leaning toward selling into this pop than trying to buy it and thinking it's going right back to 250.58.
All right, I'm back. Sometimes you get buried on the wrong side of a trade and you're just like trying to work out of it as best you can. Sometimes, when you trade and then on any given day, I got 50 to 100 overnights. You get good news every once in a while, and the news is going to not be in your favor. It's in your favor sometimes, and it's not in your favor sometimes. And it's just about learning how to work out of a position where the news is against you. So when you don't know the news, you got to quickly figure out the news, and then you got to figure out why, what's happening here, and is this move going to continue? Do I cut it now? What do I do with that? I mean, managing out of losers is going to dictate your performance as a trader more than managing out of your winners. Because I know in this environment people don't have a lot of experience with losers, but you will. I mean, if you continue to trade over the course of years, you will see bear markets, you will see all kinds of different market environments, and you got to learn how to manage out of those losers. First things first, why? What's the reason here? You got to know what is happening. When you're doing a live radio show, sometimes it's like, okay, I don't know what's going on with my stock, and I got to go find out. So I actually had 2 stocks just hammering me right there. And I was like, I got to go see what's going on. So I'm not going to talk about them for now. I'll talk about them tomorrow because I'm still in some of these positions here.
Sure.
And I don't like to talk about my active trades that I'm actually trying to work out of for obvious reasons. One, I don't want people trying to screw me.
Yeah, those Reddit guys, they're waiting for you.
Yeah, I don't want have my something I say potentially influence where the stock's going if I'm an active trade. So I'm not going to talk about those 2, but I can talk about them tomorrow. But that's what was happening there. So, okay, let's move. I'm in a better position now, though. So,
all right.
Yeah, so that's my little good. So, we've had lots. We haven't talked Kathy yet on the show. We got 5 minutes before Tim comes.
Sure, let's do the Kathy.
Before he comes on to talk Kathy pops and Kathy drops. I mean, if there ever is a Kathy drop. Let's go through. Do you have the list in front of you? What you bought?
There was a Kathy drop last week. I mean,
overall, yeah. I mean, on individual stocks.
That's a pretty
on individual stocks. Let's
see. Last week, ARKK down 14%, ARKW down 13%, KG down 13%. That's it.
Yeah, it hasn't been a good week for her.
KF down 11% there.
Let's talk her individual stocks. So, what was she buying on Friday? I had the list in front of me, and for whatever reason, my sheet of paper is gone. I tend to think the 6-year-old might have ran away with it, but
that's okay.
Anyways, I have no ARC sheet in front of me, so I forget what she was buying, but I had a list of about 25 stocks that she bought. So,
all right, again, we're looking for big buys and or new buys.
New buys, smaller names. Big buys, if it's bigger names, can sometimes be influential, but the most thing is the smaller names.
So what we're not going to do, for example, is talk about 8,000 shares of Shopify. That's not going to move it. But maybe, potentially, her buying 278,000 shares of BLI, Berkeley Lights. Maybe.
There's an interesting one. Okay, so that is not working. Keep going through the list. BLI is one of the few stocks that are down. Is there news on that?
I don't know. I didn't actually.
Here I was saying there's hardly any stocks down. BLI is not in my 2000 filter scan, but holy mackerel. Whoever was chasing her on that one is getting punished for that this morning. That stock is down. I was tweeting it out Friday night. I'm like, everybody who's been buying these Cathy pops and buying the stocks up 4, 5, 6%, it's not been a good move in the last week. So if you're paying up 5, 6% for a Cathy stock after hours, you've been getting hammered with that strategy because those things have been giving it back. We know there's times when a bull market, when Cathy stocks go up, you buy them up 5, they go up 10. This is not the market to buy them up 5 because they don't usually go up 10. In this case, BLI, I don't know what it was doing Friday night after, if it was moving at all, but it's down a buck. So if you're paying up for that, you're getting hammered.
You know what I noticed? I'm not playing these, but I've noticed because it comes through the email that it, like, you get it and then there's a correction afterwards. Have you noticed that?
Sometimes.
That's not every day. That's only sometimes.
Oh no, correction. It's a tough strategy. It works both ways. We were talking last week about, fading it. Very influential. She's been really, I think the most interesting thing to talk about is this PLTR.
I was going to go there. So she bought some Palantir yesterday or Friday, bought just under 2.5 million shares in the ARKK fund.
Yeah. So we have lots of precedents here. First day she bought it was back on the 16th. The stock closed 27.30 and ran up to 30. Or it was the day before. Yeah, I think it was that day, around the 16th. And then it bounced back, obviously, because she bought the stock. Then it was like 2 days, the 18th or whatever, she bought a whole pile around 25 probably. And the stock bounced back up to 30. So again, we've seen a Cathy pop in Palantir multiple times. This one, if it was just a new one, but she's done it multiple times, it's still getting a nice lift. I mean, it's still trading up 6% because people can't help themselves. They just have to buy and pay up huge. If you're paying up huge for the Cathy stocks, you're getting punished for it a day or two later, and sometimes that day. So I would say, you can anticipate it, when it's down big, that maybe she's going to buy it and maybe it'll get the pop. But the people who are anticipating are selling it to you today when it's up 6%. Could it go up 7, 10%? Yeah, it depends on the market. If the market rolls over here, this Palantir is going to probably give some back. The market continues to rally, maybe the Palantir continues to go. But paying up 6, 7, 10% for a Cathy pop right now has been the recipe to lose money in the last week. Just warning you.
That's not a good-looking chart. I don't care what you say. I don't care
not
who's
at all
buying it. That is not a healthy-looking chart in any way. And they just had earnings.
And
so there was a catalyst.
Joel, and consider this. It's been popped 3 times from Cathy Woods. So you take away all those Cathy Woods pops and the buying pressure. So 1, she puts buying pressure on when she's buying the stock, she's holding it up. 2, you have everybody who's chasing it that is popping it too. Take Cathy Woods out of this stock. Where is Palantir right now? Where is PLTR without Cathy Woods? That's my question to you too, Spencer. Where would it be? I tell you, it wouldn't be 25.36. It wouldn't be 23.90. It's probably significantly under 20 without Cathy Woods. Because think about all the shares that she's bought and all of the people who chase her have been buying shares. We watched it go from 25 to 30, in 2 days, just because of Cathy Woods. If you remove all that Cathy Woods effect on Palantir, it's significantly lower. So that's one concern, is that it has had so much Cathy Woods buying pressure and the stock is struggling to go higher. That's telling me there's a lot of natural sellers in here, and that chart does not look healthy either. I would not want to own Palantir.
Programming note, Cathy Wood will be doing, I believe, a live interview with Jason Raznick Wednesday at 2 p.m. Eastern Time. If it's not live, I'll let you all know that. But that is happening Wednesday. Jason and Cathy. It's happening.
That's cool.
So very excited for that. All right, it is 8:30 time, cool. 8:35. It is time for Market Structure Monday. Let's bring on our guest, Tim Quast, founder of Market Structure Edge. Tim, how are we doing this morning?
Great. Good to see you guys. Greetings from chilly Steamboat Springs, about 2 below zero here today. How are things where you are?
Not that cold.
About the same. I'm cold too.
we had a heat wave this weekend. We got up close to 50.
Yeah.
Wow.
Yep.
Wow. How about that? Well,
how about this market, Tim?
Well, I was listening to your conversation about Cathy Wood and Palantir, and it reminds me, pardon me for 1 second here.
I'm sorry, you're getting choked up talking about Kathy. We get it.
It's
We all do.
it's
We all
that-
do. We all do,
that-
Tim.
that's my statement on the market right there. Right? But seriously, there is the problem to me with much of what you hear from punditry is that the market moves for rational reasons, and you look at Palantir and you look at the size of passive money and what was happening last week. I think it's one of the most important concepts that trillions of dollars has to figure out how to get itself pegged back to the benchmark around the last trading day of every month. In 2014, the CBOE, Chicago Board Options Exchange, created a futures contract that helps passive money get itself realigned. And if you've had tremendous volatility, a tug of war will develop between the banks that supply those contracts so that folks like Cathie Wood don't have to do it all themselves, and the funds that will be in trouble if they have tracking errors. And so everybody's talking about interest rates and the reopen trade and this thing and that thing, and overlooked almost entirely is this massive wave that occurs at the ends of each month. And it happened this past week. It happened at the transition from January to February. Remember, January concluded brutally, and February began with a huge surge. So if you get yourself realigned with the index about the same time that a bunch of money floods into target date funds and 401k contributions and that sort of thing, you can see that stuff coming. That and I'm surprised at how few people pay attention to it. So and Palantir is a great example. Palantir was peaked. It was overbought when everybody was talking about Cathie Wood buying Palantir. If you look at it now, it's 1 out of 10.
Whoa.
1 out of 10 oversold, and it's dropped from 50 to 29% short. So if I were looking at that, I would say, okay, everybody who was out of whack with if Palantir surges and it becomes an especially large part of your index composition, then it's going to have to get trued up. But that also creates an opportunity, I think, to buy it. And it would be a very contrarian thing to do if you look at the chart. But if you look at market structure, after all, it is Market Structure Monday, the story may be entirely different. And I'm happy to show you.
So when these get down to a 1, they're just so oversold that they're due for a pop. Is that what it's kind of saying? Or when it's down to a 1, do those just continue to be out of favor?
Right. And Tesla is a great example of that. So Tesla's a 1 as well. But if you look at the data, you don't want to buy Tesla when it's a 1. You want to buy it when it ticks up from 1. That's when it starts
getting some
exactly
life. When it starts showing life.
Right, and you know what? And for those of you who have never heard me yammer on here on Market Structure Monday, what we're talking about is supply and demand. So at Market Structure Edge, we really don't care about interest rates or Federal Reserve. We track all that. I mean, I track the fact that the Fed is buying $200 billion of mortgage-backed securities every month? Well, sure. It's going to drive down the rates for mortgages. It's going to make borrowing money very attractive, but it's not the core of what we focus on. What we're concerned about is supply and demand. And when demand has peaked and begins to recede, stocks are going to decline. And when sentiment bottoms and people have to begin to put money back to work, stocks are going to rise. And it is that simple to me.
So Tim, let's talk what else is on your radar here. Obviously, we see some of the mega caps, some tech out of favor. I mean, a lot of stocks were out of favor last week. It was a hammer 'em all Friday close where they were selling everything here. Do you think, let's just go overall market first of all? I mean, we've had a little bit of the air come out of the bubble to a certain extent. Some stocks that weren't even in a bubble got hit last week. Do you think there's some opportunity to come here and buy the dip, or do you think there's more pain ahead?
Well, so what's the word I'm looking for? I don't want to be arrogant and say, to quote myself,
Yeah.
But we had this conversation last week. I said last week on Market Structure Monday, GameStop was a pretty good trade. Looking at it, it was 1 out of 10, 40% short.
Yeah,
I traded it this week. I made 10% in an hour on it. It's not really my kind of trading, but I knew that the probability would be on my side. If the math is in your favor, then take advantage of it. But the broad market, remember, we were looking at the broad market, and I said, this is not the time to be in the market. And I joked that, if you're hearing Maxine Waters talking about market structure, you should be in cash. But I was looking at supply and demand and saying that the math was not in our favor, and I expected tumult into the end of the month. And we're not there yet. However, because money flows in at the beginnings of new months, you never know. I will not be surprised if the market rises sharply today, and then maybe Tuesday or Wednesday, the bottom falls out again. I'll show you why, too. So if you like, let me just show you this. I think it's a useful thing to see. And folks, if you're following along, go to Market Structure Edge. And you can do the very same thing. You sign up for a free trial, so you don't have to put a credit card in or anything. And you can see this. You can see the same thing that I'm showing you. So I think if you see my screen here, this is how we see the world. And what you're looking at is this period from about the 14th of January. It's a 30 trading day period. So this very non-volatile line is market structure sentiment. The volatile line is SPY. And isn't it interesting that the VIX hit a 52-week low on February 12th at the same time that SPY hit a 52-week high, and sentiment rose over 6. So we say when the market is above that red line, danger increases. When you're near the green line, there is opportunity. And so look where we are. I would look at that and say, well, there's a chance because it happened back here. As we transitioned from January to February, the market surged and sentiment was still falling. So can prices be quicker than sentiment? Well, yes, they can, particularly because of this index effect of trillions of dollars getting rebalanced, money coming back into the market. Could that happen again? Yes, but I still would be very cautious until that line changes direction. That's how we think about it. And again, that's supply and demand. It doesn't have anything to do with Fed policy or headlines or fundamentals. It has to do with the supply and demand in the marketplace.
Tim, out of curiosity here, can you maybe pull up a GameStop? I just want to see what it's done in the last week.
Right. So here's GameStop right down here. And so the things that we will look at, here's sentiment, and the trend is up, but it's 58% short. And the lead behavior is Citadel and Quant Labs and Hudson River Trading and so on. So they're much, much faster than you. So you have to be careful. This is how you'd look at it. Where do you want to be in and where do you want to be out? Sentiment and price. So if it's bouncing against the ceiling at 10, well, that's really good. I can't tell you that you could perfectly capture these moves, but when sentiment rises, that's where you buy. And when short volume is very low, there's the short squeeze that we talked about. It really didn't happen until right into the end of the month. But then when short volume rises above the trend line and sentiment's at 10, leave. And then don't come back until it begins to tick up again and short volume has it's been covered. This is where you're going to have mathematical opportunity. But look at it now. Sentiment is still rising, but short volume is back to almost 60%. And so I think that trade is about to run out of steam again. Here was your very brief opportunity to make money, and I would be cautious because of the high short volume. But that's how we look at it.
Tim, I like to make just one comment here on GameStop. Yeah. Can you say a lower high? I mean, look at the pop that it had. If you're, if you think, like, I know there's some people who are buying 800-900 calls or whatever, and they're looking for 250, 300. If there's anything that you need to pay attention to when a stock has a dip like that and then attempts to rebound,
Right.
Look where, like right now, I mean, when it got up to 200 in the pre-market, and I mean, can you say lower high? I mean, and I don't know what if it could take news, but just from a pure technical standpoint,
right,
man, a much, 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 much lower high.
Yep. Well, in that same vein, let's look at Palantir here. So where should you have been out of Palantir? Well, when short volume was 60%, and it's 10 out of 10, even though you might miss this little bounce, which may be the Cathie Wood effect, this is the data is telling you leave and don't come back until it ticks up. But look where it is now. Short volume is very low. It's well below the trend. It's a 1. And when it ticks up, that's when you want to be a buyer. And that's going to happen here, I would say. We're within 2-3 days of that happening. And then Palantir is going to present some good opportunity. But again, this is supply and demand. It doesn't have anything to do with Palantir's results or its prospects or its competitive advantages. Yeah. It's purely supply and demand.
Yeah, I mean, but there's a lot of traders, like you look at this and they don't want to know the fundamentals. They don't want to do that. And that's fine. I mean, there's like lots of great technical trading systems. And, you know, if you believe somewhat in the efficient market hypothesis, some of that should be incorporated into the price. Yep. And then, so you look at the price action, you do get that indirectly.
Right. So, and, you know, you could go right down the line here. Tesla, 1, bottomed, 45% short. Passive money is the lead behavior. A lot of passive money has to own Tesla. So I'm going to be looking at that. I know mathematically, here's the thing. This is really an interesting way to think about the math. If I come up, we have this is a back testing engine. So if I put Tesla in and say, what happens if I buy the uptick here? And I'm just going to look at that data historically. Well, that data would give me an 83% return, which is better than buying and holding Tesla. It crushes the S&P 500, and I did it in 60 days. So am I buying the uptick in Tesla? Yes, I am. And it's getting very, very close to that. So that's how I think about it.
And what do you buy when it gets to a 2 or a 3, like just as soon as it starts ticking up from 1?
First uptick from 1. Yeah, mathematically, that has been a very good trade.
I know we don't want to give away your secret formula here, but what causes it to go from 1 to 2? Like, what is like the main driver that's going to be causing it to tick up?
Well, so it gets to one of our core principles that price and volume are not metrics. They are consequences of activity beneath them. So our calculation of market structure sentiment says there are 4 reasons people buy and sell, not 1. You know, if you look at the stock market and say people are investing, you will only be partly correct, right? But there is investment behavior, but active investment behavior, stock picking. So Tilray is being led right now by active stock picking. Well, that's 9% of market volume. 91% of it is passive, fast trading, or risk management. So we compile how those behaviors change and what effect they have on price. So if fast trading is 54% of trading in GameStop and it rises by 15%, GameStop is gonna move. And that's what we calculate here. And when it stops, what happens if the machines all of a sudden vanish? Well, we're gonna see that. And that's how the market really works. There are people who buy stocks for their unique characteristics, that's stock picking. There's way more assets now buy stocks for their shared characteristics, their market cap, their exposure to an industry, their volatility characteristics. Then there are machines like Citadel, Virtu that are intermediating the market. Well, that's a huge part of the market, and they don't want to own anything at the end of the day. So you can't look at them the same way you would look at an S&P 500 fund that has to get all of the components of the index properly balanced in its holdings. And then risk management, the use of derivatives, that's 18% of the market. So if there's a big change in demand for derivatives, that's going to have an effect. But that's what goes into market structure sentiment. So makes it very simple. You don't have to know all that stuff. All you have to do is follow a scale from 1 to 10. And that's the point here. And look, I'm not selling edge. I'm just saying that these things are so profoundly applicable to the marketplace that traders necessarily have to think about them now. 1995, you didn't need to do that.
Tim, just one more before I let you go.
You betcha.
On the FANG stocks, right?
Yes.
Let's talk about that because they've done a whole lot of nothing,
right,
for a hot minute here.
Right.
So what? How do you approach that?
Here's how. So by the way, we just default to providing a FANGs Plus portfolio to folks who use Edge. So it's gonna be there as a matter of course. But just look at this. If you focus only on the trend, so there are a handful that are bottomed. So AMD, Apple, Netflix, Tesla, all bottomed. Short volumes look very appealing. Levels below 50% are very appealing. But look how many of them are still trending down. So as a group, we are not there yet. And you can really see that just looking at the broad portfolio, the FANG, and I'll show you here. If you just want to look at the trend line, and I think very much about sentiment as a trend, and it's a 10-day cycle roughly. So look at this. Here's where they peaked. And it perfectly coincided with the top for the S&P 500. February 12th, 52-week low for the VIX, 52-week high for SPY, and the FANGs peaked. So look at the trend line. It's still coming down. Short volume looks really good. See, they were heavily short in here. Now that short volume has come back in line with the trend. When this line ticks up, we are back in business. How far is that away? It's within a week. So within a week, I think we see the market move. I don't think the market is in trouble yet. At some point it will be, but I don't think it's going to be February 2021. But you want to make sure that you capture the wave and you don't get washed over by it, so to speak.
All right, Tim Quast is the founder and CEO of Market Structure Edge. Joins us every Monday for Market Structure Monday. Tim, as always, we appreciate the time. Thanks a lot.
Good to see you guys.
Thanks,
Tim. Saw someone in the chat asking about Workhorse. No, they have not reported earnings yet. I know they're on the schedule, but I have not.
Did Kathy buy more of that?
I have not seen it.
Again, I don't have my list.
Let me go back to the email. I
just
had it open.
I remember thinking about Workhorse. Maybe she didn't.
Hold on.
It was on my brain, but maybe it was from the day before.
Go back and find it now.
I don't have my list.
Yeah, let's actually go back.
I don't even have my iPad that has the email that has the
All right,
list. I'll
go back and run through. Okay, so let's finish running through the buys from Friday. So
yeah, go through.
RPTX is up this morning. Last I checked, she bought 6,000 shares of RPTX. She bought about 250,000 shares of Teladoc. That's up this morning. We can bring Joel's chart up.
Yeah.
While we're looking at these. Okay. Teladoc is up this morning. One Life, ONEM. She bought 240,000 shares of that. It is up this morning, last I checked.
Yeah, it's bid up.
Either up or bid up. 908 Devices, ticker is MASS. She bought 52,000 shares of that.
She bought that one before, too.
Okay, it has been up this morning, last I checked. Signify Health, SGFY. She bought some of that.
She's been buying that for days.
Yep. And we mentioned Berkeley Lights, and let's see. I don't see is ADPT up? No, it's not. She bought some of that, and she bought some ACCD, and that one looks like it bid up a little bit.
These are all the same stocks she's been buying.
But here's one though. But here's interesting.
What do you have?
Square is up more than the others, I would say, this morning.
But she bought that 2 days ago, too.
Right.
So
Right.
So she's been buying that for a couple of days too. The one thing to consider is what Spencer was saying earlier is, one, is it a new buy? Because it's going to get the most pop. Two, is it a smaller company or a bigger company? Because obviously her, influence is going to be well pronounced in a company that's smaller, as opposed to if she's buying Microsoft or Apple, where she's not going to move the needle much at all. So that's what you got to consider, and I just try to throw, the quantitative approach to it and say, okay, well, this is a new buy. This should be up more than it is, or this is up too much for that. When they're buys, she's been buying for a week or 2 weeks or 3 weeks, and they're trading up 5-6% because everybody this morning is excited about Kathy again. Those are shorts, in my opinion, or sells. So that's what you have to look at it.
Are there any cells?
That's how I trade it.
Can
That's
I ask you guys a question?
Yeah.
Are there any cells on there?
Of course there are cells.
Nobody looks at them. There's all kinds of cells.
But I mean,
Nobody
there is all
One,
kinds
two,
of cells
three,
because
all kinds of cells.
Okay.
So what's
Okay.
a few things she sold?
9, 10. I'm just counting the cells right now. Hold on.
She sells all kinds of stuff, but nobody looks.
Honestly, I think it's like half buys, half sells.
okay,
She's
good.
just
Okay,
rigged.
good.
It's such a rigged market, Joel. Not that it's rigged, but it's just like the mentality.
We talked about that a long time ago.
It's the same thing with SEC filings. You can see somebody bought 10,000 shares of a stock in a smaller cap name, and the thing rips up 5-10% because of the director that bought it. Another director will sell 1 million shares of a small cap stock, and it won't go down at all because they say, oh, well, they're selling because they want to go buy a mansion or they want to go do something. But there's only one reason to buy, and that's because they want to make money in it.
Hey,
so I mean, it's the mentality.
That's the truth.
I don't even look. And this is, I'm a professional trader. I don't even look at the insider sells because I know they're not going to move the price. If they start moving the price, I'd start looking. But because I know they don't move the price unless it's something, like Icon dumping out of a position that he was an activist in or something major like that, they typically don't move the price. The Kathy sells, maybe a little, you see more pressure in the stocks that people are anticipating she's going to buy and she doesn't buy it. There's more pressure in that because there's crowded trades. People try to anticipate, oh, well, she's been buying this for 4 days in a row. She's probably going to buy it again. And if you jump in that and she doesn't buy it that day, you'll actually see that stock go down the next day because she didn't buy it because everybody who bought it on the close, is a bunch of anticipatory traders doing that, need to get out because they're like, oh, crap, she didn't buy it. And then they're trying to work themselves out. But
does she have to disclose, do we know, or does she disclose if she does options trades?
I think she would. I think she would disclose it. I don't think she does.
Because
like
everyone's doing all this interpretation of things, and when she's buying, she maybe long puts or so. I mean, I don't know.
I don't think so, Joel. I don't.
Okay, I don't know.
She would disclose that. She doesn't have to do it. Like she's not an inside. Like, she's doing this. Like, the question is, people can ask the question, why does she do this? Nobody else does this. Why should she do this? To be honest with you, I think she does it because she knows she can give the stocks are going to get a pop. I mean, it's like, wow, why wouldn't you do it? I mean, if you could buy a stock, a new one, and then it's going to pop 10% because you disclose it that day, I mean, you're up 10% in it before you even did anything. So why not?
Oh, well...
There's a case there. She's doing it because she knows the market will rip her stocks higher.
I don't know.
The market's fault.
I don't know how long she's been doing the daily emails, but I would imagine I know we've only been paying attention for a couple months, but I've been imagining that they've been doing it because that's what they do. They do actively manage ETFs, and the entire point of an ETF is that in the first place is that it's transparent. If you want an actively managed, non-transparent ETF, those exist too. But she's got an actively managed, transparent ETF. And that's the point is to release it daily, so you can see what she's buying, what she's selling, and as far as the sell is not moving the stock, it's because she sells Tesla all the time. But it's mostly to rebalance. Tesla
she's rebalancing constantly.
Right, she's rebalancing constantly.
Well, she has inflows and outflows too. She has
to. That's it, right? Exactly.
People that are
she has to manage the money going in and out.
Yeah.
So and she does that by buying and selling stocks.
Yeah.
So that's the other part of it. That's a great point.
Yeah. So and Kathy, we got to give her props. I mean, I follow her trade. I don't follow any. This girl has literally changed market dynamics where. I used to care about Warren Buffett. Every 45 days we see what Warren Buffett's doing. Now we get a Kathy email every night. These are tradable events.
Can you imagine if Warren Buffett disclosed his stuff every night, every day?
Here's
what I bought.
Well, it wouldn't be very much because he doesn't do that much. But Kathy's actually actively trading. So, she's active. I mean, how many trades did she make on Friday? Like 50 or 60?
50-something.
50-some trades. She's like an active trader here.
They are active.
The question is, is she doing this just to be more transparent, or is she doing it because she knows her stocks will get a pop if she does it? I mean, why wouldn't you do it if you knew your stocks were going to get a pop if she does it? So I think it's smart of her to do it. If the market's going to follow her that closely, why not? Why not? You're going to get this pop. Everybody's going to talk about what you bought. You buy Palantir, I'm going to buy 5 million shares, and it's going to get a 5, 6, 10% pop after hours because you disclosed that you bought it. So it's smart trading of her to know that she's got that influence and people are just blindly following her. Now, is it smart of the followers? That's what I've been arguing, is that in Palantir, it has not been working. If you've been buying up 7, 8, 10% every morning when it's popped, well, if you've held for the last 4 or 5 days, you're down. If you maybe it pops up 10 and you're getting out up 15. But overall, you're giving up a lot of edge. By buying Palantir up this morning, up 6.5%, you're giving up a lot of edge, man. So the question is, does it go up 10 or 12? Can you get a little extra oomph? Some days you do. Some days the market rolls over and this thing gives it back. And I mean, really overall, if you're looking for the last 6, 7 days and you've been buying this and holding it for any longer than a day, you've been losing money with this strategy of blindly chasing her. So there's times to blindly chase Kathy and there's times to maybe lay off of that. I think right now we're still in the layoff of the period of blindly chasing Kathy Wood.
And I want to look at like AONE, which she bought on Friday, which is up this morning, but well off the high. You can see what it did at 4 a.m. It got to $14. AONE.
At 4 a.m., there's so much illiquidity. All it takes is one or two excited people, and it can pop. There's sometimes nothing in the book. Like, people don't understand. At 4 a.m., the book could be empty. Like, there's no orders. If you want to get aggressive, you could buy a thing at $18 probably, because there's nothing in there. So you say, I want to own it. You go 14 bid, 15 bid. Somebody that's, a more, seasoned trader is probably going to say it's too much and smack you. And they're going to hit you short. But sometimes at 4 a.m., sometimes these moves are sustained. It's tough. But if you're getting all excited at 4 a.m., be very careful. Like, 4 a.m. trading is not for rookies. It's not for somebody just starting, because there is, obviously it's all pricing inefficiency at 4 a.m. And if you could pay up, substantially for a stock thinking it's really good news, and you can really get hammered. So be very careful trading.
We have some breaking news here. Let's see if my soundboard works.
More bad news for me on the stocks that I got.
Was that too? That was too quiet. I feel like. Let me get that up here. That was too quiet. There we go. All right. Ticker Wi-Fi is halted. Boingo Wireless shares are halted. They are announcing the purchase of a company, Digital. I'm sorry, they're being acquired. That's what's happening. They're being acquired by Digital Colony, ticker CLNY, for $854 million. Shareholders of Wi-Fi will receive $14 per share in cash.
It's funny. You see this thing rip higher at 9 a.m. They didn't halt it in time. So the news probably hit, and they're trying to halt it, but they don't get it halted in time, and everybody gets picked off. So 1177, 11. You can see all the trades. There's literally been no trades on this the entire morning besides an off-exchange trade on an odd lot, 1140. And then at 9 a.m., 1177, 78, 77, 77, 1213, and then 1225, 1225, 2700. So your high-frequency algorithmic traders, they're picking off anything that's below that takeout price. So if you're gonna come out with the news, you got to get it halted before the news. Like don't hit the wire and then halt it 2 seconds later. When did that hit the wire? Let's go look at the Benzinga Pro.
Man.
Exact second that hit the wire.
Let's see.
This is a screw up by the company. That's what it is.
Let's see. The press release hit at 9 o'clock on the dot.
Yeah.
900.
There's still trades going off at
00.
9000, 9001, 9004.
It's the guy the exchange runs the exchange lifting offers before he
so it hits at 900 on the dot, and then it all gets lifted, and then they halt it. When did the halt happen? Do we have the time of the exact halt?
We do.
You can go to NASDAQ halts.
We do in Benzinga Pro, as a matter of fact.
When the exact halt happened.
Yeah, let me look it up for you in the Benzinga Pro signals tool. Halt at 90006. 6 seconds later.
Yeah.
6, that's eternity.
Well, how in the heck? Like, come on. So somebody's at fault here. Either the exchange halted it too slow, or the company released the press release too fast. Either way, I would think the company's going to come out at 9 o'clock. You got to get the thing halted before the news. I mean, those people that sold at 1225 got picked off. So if you're going to come out with a takeover,
we got some other news going. What else is going on here? We just popped to 55. Now we're back at 50. Bouncing around like a ping pong ball. Hey,
anyways, that's a joke to halt. Don't bother halting at all. Sometimes on mergers they don't halt them at all. But if you're going to halt it 6 seconds after the press release, you're wasting, everyone's, it's you're just allowing the high frequency trader to pick off anyone who's sitting in the book below that price.
Hey, Des, before we wrap up, do you know where Johnson & Johnson got to at 4 a.m.?
No.
165.
I know people just overvalue these vaccine plays. Johnson & Johnson, it's not like it's Moderna or Novavax, and this is like it for them. J&J is a huge company here, and you're giving it all that weight on the tape that J&J's actually looks kind of broken through the 160. It's a snapback rally to sell. That 165 was a gift, in my opinion. I think even at 161.5, it's still a gift.
I know. I was talking about
I don't like the chart at all in J&J.
Even yesterday's high.
Like Pfizer, think about how much we kept popping Pfizer and Pfizer and Pfizer. It's $33 now. Full disclosure, I do have some Pfizer in my long-term investment portfolio. But man, what a gift. From 40 to 42. You know, we kept popping up. Gilead was the same thing. Kept popping up on the vaccine news or the remdesivir, you know, on the therapy. And that was all a selling opportunity too. So Novavax, Moderna, different story because this is so big. It's like everything to them. But Johnson & Johnson, this is not going to move the needle on their bottom line.
Big company.
So, big company. It's not moving the needle on the bottom line. You get 7% pop or 7-point pop and something like this. It's a gift. Take the gifts. In this market, you take the gift that the market is giving you, like in your GameStops and these, you know, some of these short squeeze stocks and KOSS. You take it, or the market takes it for you, because eventually they go back down. Cost KOSS was up like $37, $35 got to 2 days ago, back to 17. So you take the quick money, or the market takes it for you.
All right. That'll be
Everybody
a wrap.
says I look upset. I have multiple reasons. I'm hyper today. I'm a little bit upset because I had 2 pieces of news hit me in the middle of the show that were negative for my stocks. But that's just bad luck. I mean, you happen to be short the wrong stock. So not a huge deal. You get over it. So.
I'll tell the news guys to help you out tomorrow, and maybe hopefully that helps. I don't know what kind of influence.
Man, the news comes out. If there's breaking news on a stock, you might be short it, you might be long it. When it works in my favor, it's not good trading, it's bullshit luck. When it works against you, it's not bad trading, it's bullshit luck. I used to say this to new traders. They'll say, what a great trade, I was in this stock and just randomly got taken over and the chart had been going down forever, but whatever their thesis, maybe they were in it, they thought it could eventually get taken over. And sometimes rumors and stuff, that's okay, but sometimes it's just random. Sometimes it's just random luck. You're in a stock like Wi-Fi, like the stock's been going down for 3-4 days, gets taken over. You happen to be short it, it's bad luck. You happen to be long it, it's good luck. It's not good trading though, so you can't consider that. I always say take those gains that you get from a breaking news after the fact that you just happen to be in, and throw that into a piggy bank. If you actually made 10 points because stock randomly popped up 10 points on random good news, that 10 points will eventually be taken away from you if you hold stock overnight on a stock that's going to have bad news that's actually going to work against you. So when you have a stock, random news works against you, it comes out of your, that little piggy bank that you got going, because it's nothing to do with your trading ability. That's all luck.
All right, Spencer, who's our guest tomorrow?
Oh, it is Tuesday. You know what that means, doesn't it? Mies Schneider. We're the off week, right? Mies Schneider. I was thinking it was Nick, but that would be next week. So Mies Schneider will be our guest on tomorrow's show. She's great. Market Gauge. She's fantastic. So want to remind you all that today's show, every show actually, is available as a podcast on all the major podcast platforms. If you're listening to the show via podcast, please remember all the information on our show is meant to be used as informational purposes, not for investing or trading advice. The disclaimer is up on the screen. We want to thank our guest today, Tim Quast. He is the founder and CEO of ModernIR and Market Structure Edge. To learn more about Market Structure Edge, go to marketstructureedge.com. It is the first decision support platform for traders built on market structure. It's also the sponsor of today's show. It's going to be a wrap for me. Here's what's going to happen. I'm going to stay on for like 15, 20 minutes. Then I'm going to hop and I'm going to transition to our next show, which, again, the link is in the chat. It is pinned to the top of the chat. Get Technical with Neil Hamilton. So if Dennis and Joel want to hang, they can. If not, they can dip. That's cool. I'm going to hang with you all for a few minutes. We're just going to hang out. We can talk news, talk whatever we didn't get to during the show.
I got one more thing, actually, just before you go to Technical, if I can. I actually had a Twitter question, which was a good one.
We didn't get to this.
I'll take 3 minutes. 3
Yeah.
minutes to try to go through it. It was from Ticker Vault, a follower of mine. He was just asking about sizing up trades.
Yeah.
He or she was asking on Ticker Vault. I don't know if that's a boy or a girl. So Ticker Vault. Sizing up trades, meaning, okay, you're trading at a certain size level and you want to try to go to the next size level. And they were talking about the struggle. It's like, I want to get to that next size level. It's like all of a sudden I'm not doing as well as I was doing with smaller size. You're always going to see a little more slippage. As your size gets bigger, you're going to see a little bit more slippage. So if your strategy is making 90% at size 100 shares, you go to 200 or 300 shares, it's going to make a little bit less. You go to 500 shares, it's going to make a little bit less. You go to 1,000 shares, it's going to make a little bit less. It's slippage as you get bigger. 100 shares, really easy getting out of. Most stocks, you can get in out of a few hundred, 500, maybe 1,000 shares. You start to get into 1,000 to 2,000, you start to, okay, now you have to start to be able to work orders, because it's not like I'm just getting in and out on the bid. I mean, if we're trading Bank of America, it's easy. But if you're trading any smaller mid-cap stock, it's not that easy to get out of 500 shares, 1,000 shares as it is to 100 shares. So you got to start working the order a little bit better. If you're just blindly bidding stocks, you push the price away from you. 100 shares will push the price a little bit. 1,000 shares will push the price a lot. So you got to. It's all about execution styles and strategies on how you get in and out. And trying to conceal the intentions of your orders. One type of order I like to use a lot is a discretionary order, where I put my order way lower than the current price, and I put discretion on it, because if I just throw my order right out there and go top bid on something with them, it's a really fast stock, you might get out top bid. But if it's a smaller cap or a mid cap name that isn't moving as much, you will actually push the price away from you, because there's algorithmic traders that are reading, oh, we have a new buyer, they want to pay up more, and they will try to make you pay up more. So what I use a discretionary order, where I try to get outside the market. I'll go, if I want to buy the stock at say $25, I'll put $24.50 with 50 cents of discretion. So anything that stock came and offered at like $24.80, I'd get $24.80, which is better than my 25. So, that's called discretionary, and that's one thing to try to help with the slippage. If you're just struggling with the mental game of sizing up, because all of a sudden it's like, oh, you're used to trading 100 shares and you're making, $50 or $80 or $30 depending on your timeline, and now all of a sudden you're trading 200 or 300 shares. And I'm going back to when I started in 1999. I struggled with that mental game to get off 100 shares, where I started bright trading in 1999. It was 100 shares and I was being consistent, but when I go up to 200 or 300, I get more nervous and psychological factors come in. I still struggle with that. I'm at a different size level now, but if I size up where I start to double my size on trades all of a sudden, I start to get more nervous with it, because you're getting a little bit bigger than you're comfortable with. So you try not to get out of your comfort level. It's nicer when you can size up by just going up like 10% at a time, 20% at a time, not trying to double. I mean, when you're 100 shares to 200 shares, you almost kind of got to double because you're 100 share lots. But if you're trading like 1,000 shares or something normally, instead of going to 2,000, maybe go to 1,100, maybe go to 1,200. Don't get so much out of your comfort zone where the numbers are getting so much bigger, where the losers are getting bigger, because when trades go against you, that it's affecting your psychological mindset on it. So that's how I've tried to size up, but it's something that all traders struggle with to a certain extent. We always want to get bigger. We always want to get to a different size level. I mean, think about Chris Camillo. He trades huge size on stuff. I can't trade that kind of size on stuff, even though it's on some trades I might have the capital to do it. I'm not comfortable trading size. I don't like losing huge money on stuff, and Chris has had some big losers, but he makes big money too. So, I mean, it's all a matter of what your comfort level is as well. So I like to stay diversified, trade lots of different stocks. I don't like to be in just one stock and all in. But, again, the psychological aspects do come into play as you're sizing up. So
I'd like to make two comments on this. One, if you're trading 10 stocks, you don't have to go up on size on all 10. Maybe you go up on a couple, incrementally.
Yeah.
Yep. And then the other thing, which is much more important than that, is the market environment. Okay? Like if you're doing really good, the market action over the Friday, if you had a great week last week and I crushed it on Friday and this and they're like, okay, I think a lot has to do with the market environment. So you could be ready to up your size, but it could be a market environment where the market is moving and you could make as much money on 500 shares as 1,000 shares.
Yeah.
So just because you're ready to go, just because you're ready to do it, I mean, doesn't necessarily, be aware what the market environment is, because the timing of it could just, it could wreck your confidence, and then you bump up, you get crushed, and then you come down. So just make sure you're careful of the overall market environment.
I'm constantly adjusting my size, and you're right, Joel. That's a huge factor involved. Is when I have a strategy that's not working as well, I start decreasing the size on it. I never stop doing the strategy because then I won't know when it starts working again. But I still employ the strategies, but I employ it less. So I'm like, okay, this isn't working as well. I'm going to just decrease the size on it a little bit. Like Kathy, buying Kathy pops haven't been working as well. So, if that's your strategy, and like I said, I've been actually going against that strategy to a certain extent. But I mean, if it's your strategy, you're long only trading, you're buying Kathy pops and not working as well, you decrease the size when it's not working, and then you start increasing the size when the strategies start working again. It's a way to monitor, what the strategy is doing too. So we could have an hour conversation on this, but those are some tips there. So Tickervault, great question. Thank you for that.
That wraps up the 3-minute answer.
All right,
I did it 6, 5.
and there's also a couple
of it.
We love you, man. No, knowledge. This is what people want.
We're trying to give you education here. We're not trying to spoon feed you trades. We're trying to educate you, make you better traders.
Chateau is good for a few zingers. Spinner has a great one. You never have enough size when they're going up.
Never.
You always have too much size when they're going down.
Always.
That's always.
Always.
Always. Yeah.
That's so true, Spinner. I'm always like, why didn't I put more of that on when it's going your way?
Yeah.
And it's like, how am I that big in that stock? I was way too big in that.
What am I doing? What am I doing in that stock?
Somebody asked me if I regret I didn't buy more cannabis stocks, knowing, and I was like, well, yeah. If I knew they were going to go up, I would have bought more. No,
I like to go all in if I knew it was gonna. If I had a crystal ball, you knew it was gonna do that.
Of course, I would have bought more if I known they were going to double in a year. Jeez, how could I be so stupid? All right, guys, fun. Dennis, Joel, thanks a lot. Joel, see you for pre-market prep at the close. Today is not going to be a mega stream, guys. This is what we're going to do for at least the next few days. We're going to do individual streams for every show. So pre-market prep gets its own stream. There's a link in the chat to get technical. That'll start at 9:30 with Neil. We'll have a new stream at 10:30, a new stream at 11 for SPACs Attack. Mitch is out today, so he's moving. So I'll be filling in for Mitch on SPACs with Chris Kachi. We do have some SPAC news today, which we can get to here in a second. A new stream at noon, a new stream at 2:30, 3, 3:30, and 4. Again, all of these links, I'll just put the link in the chat. All these links are already on YouTube right now. If you go to Benzinga's YouTube channel, you can see all of them there. You can tune in to what you want, what you don't want. I'm just tuned to all of it, but hey, we realize some of you probably have jobs and things to do, and that's fine. That's why we go all day. But for now, via different streams. So there is the link in chat, youtube.com/Benzinga. You can see all of our scheduled streams for the day. We're going to do this at least for a couple more days, and then we're going to reassess, right? Because we did the all-day 8-hour stream for a couple of weeks. There are some things we liked about that, some things we didn't like about that. We're taking your feedback, as always, and there are some things that you like about that and things you don't like about that. So we're going to take all this in. We've only been doing this separate stream now for 2 days, so we're gonna do it for a few more days and sort of reassess how we want to do things, because there's no right way. We're always changing things, but that's how we're gonna do things, at least for Monday, Tuesday, and probably Wednesday. It's just different streams for every show. Gives us more clarity, one, as to who's watching what, which is helpful. But we also want to make it easier for you guys to find our shows. So that's always something that we're working on. All right, 9:20. I'm gonna hang with you guys for about 8 or 9 minutes, and then we'll hop off the stream. We'll go over to get technical with Neil, and we'll have some fun looking at some charts. A couple of things I want to get on the radar in the meantime. I mentioned Workhorse. I guess the earnings are finally out at 9 o'clock, which is very late in the morning for an earnings report, but nonetheless, here we go. Let me bring up my screen so you can see what I'm seeing when I look at the numbers in Benzinga Pro. Here they are. Again, earnings. I don't even know if this company has earnings. They don't even have sales, really. Look at that, $652,000. They don't really have revenue at this point. So they missed the estimate. Net income, $280 million. Man, this company's early days. Let's look at the chart. So you can see here, this is really easy, right? Because it's the first day in March. So you can clearly see the division in the days between Friday and today. So it is down after that report. Not a ton, though. I mean, you can see that red candle. It's down to 0.7% in the pre-market today, but not a ton of action there in Workhorse. Let's go to Boeing here. This one caught my eye. So a headline that United has increased their order of 737 MAX jets. That brings their total order to 180. Oh, I didn't bring up my chart. I apologize, guys. Let's go back to Workhorse. You can see that Workhorse chart. There we go. You can see that red candle on Workhorse. Boeing. So UAL is buying more of Boeing's 737 MAX. That's the takeaway there. Chart. Look at that. Very easy to see that, right? Pretty obvious. Okay, what else did I want to say? Oh yeah, the SPAC news. Let's talk about this Vector acquisition. We'll cover this in more depth on SPACs Attack at 11 o'clock. But Rocket Lab, which don't even know what they do, but I'm imagining involves space, is going public via a merger, or I guess an acquisition, with Vector Acquisition, ticker VACQ, $4.1 billion deal. So that's pretty big, right? See. Not all these SPACs are that big, but $4.1 billion is a pretty nice size deal. VACQ, look at that. Look at all that action already. Wow. How high did that get? They got to $14 and is that right? Where's that high? $16.80. $16.80. Wow. We're down to 13 now. These things really move. I never heard of this SPAC before today. I never heard of Rocket Labs before today. So Chris Kachi, who's spending the morning doing some research, will have more insightful commentary than I on SPAC Attack at 11 a.m. Eastern time. Let's go back to my movers tool again. This is what I look at every morning when I get in. The first thing I do, and this is how you can tell that it's going to be like an up day or a down day. So this morning, at a couple hours ago now, when I hopped in here, I get in front of my desk and I see like what are the top gainers and the top losers and the magnitude, right? So this morning there was not many stocks on this down list. It was all like leverage ETFs that were down. Fisker's been down all morning, but there wasn't a lot of names here. It was a lot of you see a lot of direction funds, right? A lot of ProShares funds, not a lot of like actual stocks, and that's a giveaway that we're going to be up pretty much across the board. And if you look at the magnitude of the biggest losers versus the biggest winners, and with a couple of exceptions there are far more double-digit gainers this morning than there are double-digit losers. Obviously, ATNX sort of flies in the face of that. Phoenix, they had some earnings this morning, and they also received a complete response letter. Never a good thing. That basically means the FDA says, we're not going to approve your drug right now. We need more. That's what a CRL, complete response letter, means. Earnings are irrelevant at this point. It's all about the complete response letter. So if I go to my chart, we can see what ATNX is doing. Yeah, ouch. I'm sorry to anybody who's long that. But this is part of the game, right, in biotech stocks. So we'll talk about this on Biotech Buzz at 2:30 with Vivi. Get her thoughts on that. But that's kind of par for the course, right? Okay, let's see what chat's talking about. I want to add one more thing actually from chat. I saw people were thinking that we're hating on Cathie Wood. We were not hating. Nobody here was hating on Cathie Wood. We're acknowledging her gigantic influence on the market, and that cannot be denied. And that's just a fact. That's not hating on her. That's just the way it is. It doesn't matter how anybody feels about her influence, whether it's earned or not. That's the way it is. She moves stocks like that every single day. So that's not hate. I don't think no one's mad about it. Dennis isn't mad about that. He's trading it. That, if anything, he likes it. Give him something to trade. So I just want to clarify that, right? No one here is hating on Cathie. No one here. We don't really hate anyone. If you have influence, you have influence. Doesn't matter if anybody, if I or you or Dennis or Joel thinks that influence is deserved or not deserved. Influence is influence. We are living in an influencer market. Is it dumb that Elon Musk can tweet that he loves Bitcoin and it goes up, yeah, it's dumb, but that's the way it goes. I mean, that's kind of in the market that we're in right now. So, it doesn't matter what anyone thinks. It just matters what reality. And reality is Cathie Wood moves stocks. So that's why we talk about her a lot, frankly, because she's moving stocks. And it's not just that she's moving them. It's when. It's always in the after-hours session. And that's when Dennis trades a lot. So it gives him something to do. And it gives us something to talk about and a unique perspective because she's basically injecting volatility later in the after-hours session. Like most of the headlines come out at 4, 4:30, 5. There's really very little news flow after 5 p.m. Eastern time. Cathie's emails are out at like 6 o'clock, 6:30. So she's injecting fresh volatility every single night into the after-hours markets. So that's another reason why she's moving stocks, but it's also when the news comes out, it makes it extra impactful for Dennis. So it's top of mind for him and top of mind for us. So that's why no one hates Cathie. You got to admire she's been incredibly right on her Tesla call. And the other thing, and I'm gonna see if Jason will ask her this question on Wednesday, but I think human nature is playing into this because it's way easier to be, I think, pessimistic than optimistic, right? Cathie Wood has made a name for herself by being extremely optimistic on the future of tech and genomics and all these companies that she owns, and optimistic like to the point of like eye roll, right? Or like you're like, seriously, really? You think that could happen in 10 years? Really? It's just easier to and I'm as guilty of this as anyone. It's easier to say, yeah, right. That's not going to happen. I mean, you can't argue with her results, right? I mean, she's been right so far. She was right about Tesla. Even if you think that was dumb, she was right about her price target 2 years ahead of schedule. So I want to make sure Jason asks her about that on Wednesday. It's just she gets a lot of hit criticism, I think, because it's just easier for people to be pessimistic than it is to be optimistic. Okay, it is 9:27. Here's what's going to happen. I'm going to hop off of this stream. Okay, if you're watching this stream, it's about to end. There's not going to be any more content or any more reason to watch the stream after I leave. What I'm going to do is go to the link that is pinned to the top of our chat. If you go to the YouTube chat, you can see it's pinned there in blue. It says up next, Get Technical with Neil. If I click on that link, it should brought me right there. Excellent. So that's what it's going to do. You click on that link. It'll bring you to the start of that show. I'm going to hop off of this show. I'm going to go in there with Neil. We'll start that up in a minute or so, and then we're off to the races like any other day. So with that being said, everyone have a good rest of your day. I will see you in the link for Get Technical, and good luck at the Open. Guys, what are you doing here? Get over to the other stream. It's in the description. It's in the description. Go down below. There's nothing here. There's nothing here.